According to Biden spokespeople, everything is fine. Everything is fine. People are getting jobs, wages are rising, and families are saving and investing. Now, if you listen to the chief economist of KPMG, doesn't sound like things are going too good. Play that.
The worst mistake would be to allow a repeat of the 1960s and 70s, where we let inflation erode living standards and squeeze profit margins, layoffs compound a vicious cycle that went on for years. That's worse than a recession. It's nothing is good. This is between a rock and a hard place, and there's no way to extract ourselves without there being some pain.
Nothing is good. There's no way to extract ourselves. But everything's fine. Everything's fine. Calm down. Joe Biden says so, right? You know, Brian D. says so. My first guest is the president of Walser Wealth Management, Rebecca Walser. Nothing is going good. We're in a rock and a hard place. When you hear some of these administration spokespeople saying, look, everything's fine, unemployment's low, wages are rising, people are saving, people are investing, and then you watch the videos, the correspondent videos of people on the streets, when you watch a food bank in Fairfax County, Virginia, run out of food in 90 minutes. We're not talking about a very poor place in the state of Virginia. It seems like people are actually burning through their savings and maxing out their credit cards just to eat.
Yeah, that's no doubt about that, Andrew. And the thing is that if you look at AT&T, you know, we just had AT&T come out and lose a substantial amount of market cap because they said people are not paying their phone bills. Now, these are regular traditional cable bills and also cell phone bills. And you know how attached we are to our cell phones. So you have an economy where people are not able to pay for their phone bills. You know that people are down to their last. We know that they've blown through savings. We know that they've maxed out credit cards. We're really getting to a point now where Americans are going to have to make really tough choices on how to keep buying food and paying for their gas.
But this is a transition, right? It's necessary, they say. What does it mean? I mean, look, you handle wealth for people. What does it mean when Walmart says, yeah, our profits are down? I mean, how many people have some of their retirement tied up in Walmart stock or Disney stock or Coca-Cola or Unilever, Procter & Gamble? All these companies are reporting lower than expected earnings.
Yeah, and that's so important, Andrew. But I think what really is the bigger issue is that people need to realize 2022 is the year of the macroeconomic change. So when we talk about individual stocks, we're talking about the micros of their revenue, their quarterly earnings, their guidance for future projections and all of that. And that is certainly being impacted. But what is really going on here is a global unraveling of the monetary system. We have basically created so much debt that is not backed by true hard assets that even exist, that there comes a tipping point. We were really getting to that tipping point at the end of 2019, and then when coronavirus happened, we in this country basically authorized and or printed $10 trillion. The rest of the world printed $20 trillion. That's $30 trillion that literally has been created in the last 28 months. That is unsustainable. That is why we have such massive inflation. But then we had the complication of Russia invading Ukraine. Then Russia got kicked out of the international SWIFT international payment system. And what that has led to, Andrew, is where we are now, which is a disaster because Russia is aligning with the BRICS nations, which is Brazil, Russia, India, China, and South Africa. And they are now formally announcing a new alternative multipolarity reserve system outside of the US dollar, de-dollarizing. That is 40% of the world population. This is creating a massive global financial unraveling that will come to our shores and really in the near future, unfortunately.
I know you wanted to talk about China. I guess I'm more fixated on the kitchen table stuff. But, you know, look, tell us. You wanted to talk about where China fits into all of this. Please go right ahead.
Well, it is kitchen table, and that's why it's so important for us to talk about it, because what people need to understand is that the petrodollar, Henry Kissinger going over to the Saudi Arabian king in '74 and basically saying, hey, we'll be your military support to keep the security of Saudi Arabia if you guys will agree for OPEC nations and Russia joins in to only sell oil in US dollars. That happened, and that is why the dollar has been the strongest currency since the 70s. What is happening now is that is over. The petrodollar is officially dead because Russia is selling energy outside of the US dollar since they've been kicked out of SWIFT. So what people need to understand is all of the ability of the Federal Reserve to print money that other countries needed to buy oil is over. So the Fed cannot come in and save us. Whatever is coming with this global economic unraveling, we do not have a Fed in a position to bail us out. And that is why it's a kitchen table issue. And that's why people need to understand what's going on.
The Federal Reserve just seems like a mess. Maybe I'm just saying that as a non-professional in your industry. It just feels like the Federal Reserve is a complete mess. I mean, you know, you have libertarians that say, let's audit it. You have people who say, let's go back to sound money like gold, silver, bimetallism. And then we have this issue now where we're just making money out of thin air. Jerome Powell said it so flippantly. Well, we don't just print it, but we print it, you know, zeros and ones. We just basically capitalize banks. Well, you can't just make up money.
Well, this is exactly what we've done, and this is exactly why we have massive inflation. Remember, we talk about 9.1. That's just inflation that does not include energy or gas prices and food. So when you really add in gas and food, which is our two largest categories of growth, you have inflation that's really high. I won't even give you the real numbers, Andrew, because it's just too depressing. But it is, the Fed is not going to be able to come in and save us. And so Americans need to prepare for what's coming. We expect supply chain problems that are going to be affecting food by the fall, September, October, even sooner. We need to make sure we have a decent supply of food for a little bit of time while we get through this crunch. And we need people to understand that, you know, their 401ks are really subject to a substantial diminution in value this year if they do not do things to protect it. I mean, this is not the year to be invested necessarily fully in equities. It is time to go. There is a thing in the financial world, Andrew, that is worth pursuing, and that is preservation and protection. We don't get to these macroeconomic years very often where it's not about the individual stock, but 2022 is the macroeconomic year where there is a sea change of the financial system worldwide, and it will impact us. It's coming. We need to
see what it sounds like you're talking about is the intersection between currency devaluation and price inflation. But the media is more fixated on price inflation, not the intersection of price inflation, which means everything's more expensive. I don't need to articulate that. And then currency devaluation means we printed so much money that's not really worth a whole lot. I mean, whether it's the Weimar Republic or Zimbabwe or not that long ago, Venezuela, when countries just say, hey, we'll make up money, and then you have energy prices spiking, affecting everything, you have this intersection that's going to be very, very painful.